Welcome, everybody. This is 96B for you, and we are going to be learning to be fluent in the mortgage language because we have our host like no other, which is me, but my co-host this evening is José Castro from Total Mortgage that speaks very fluent, efficient, immediate level mortgage language. So I just want to welcome you to the show. So let's begin. I challenge you to find, if you really understand the mortgage language, even after buying a house, I challenge you. Anybody is a challenge. So without further ado, here's Jose. How are you, my dear? How are you feeling? Is it a delay?
I'm good. Very good today. How are you doing today?
I'm good.
Or I should say, it's about what, 10 o'clock where you're at?
I'm good. I mean, after I finish the show, I'm going to bed tonight. That's the first because I'm tired.
All right. Let's have that. I know you all have some pressing questions for me. So
yes.
Let's have that.
Okay. So I let everybody know you speak fluent, immediate language of mortgage, which is very important for lending. That's, I didn't know it was a verbiage, a vocabulary.
Out, so I don't know if I'm
missing anything. We needed to know. So tonight's deep subject is talking about escrow. So here we go. This is why I cut it off. I'm sorry. It lets my alarm system let me know that somebody's in the way.
Okay,
somebody's every time you turn around. But it's a good thing. But when you're on the show, it's not a good thing.
Okay. Yeah.
So
right.
I want, there are two different escrows. So explain what escrow is when you are doing the paperwork, meaning
when escrow. Yeah, let's start with this, right? So escrow basically by definition, right, is basically kind of a financial or transactional agreement in which a third party is going to hold money, documents, property, etc., until certain conditions are met, right? So you're going to see this in that mortgage process. You're going to hear the word escrow a couple of times. And then when you get to the closing, you're going to hear it even more, right? And the reason why is because there's actually two major, portions of the word escrow that we're going to use, right? So when you open your title transaction or your purchase transaction, essentially, you're going to go to the escrow company or the title and escrow company, in which that's where you're going to make the deposit. They're the ones that are going to hold the documents as far as the transfer documents for the property. They're going to read your purchase agreement, which they're going to look at as an instruction and say, okay, once we satisfy all these conditions from the buyer and the seller side, then we can basically close out this escrow, right? Then the money transfers to the seller from the buyer, from the bank, wherever they. So that's the first part of it, right? That's the escrow company, okay? And then when you're going through this closing, they're going to say, okay, you also have an escrow account, right? So in most cases, when we do a mortgage, we factor in your insurance and also property taxes in there, right? So home insurance, property taxes, and then depending on what type of program you have, if you're doing USDA, you're going to have a guarantee fee. If you're doing FHA, you're going to have mortgage insurance premium. If you're doing um, a conventional loan and you're making less than 20% down, you're going to have private mortgage insurance, right? So all of those things are going to go into what's called an escrow account, which when you make your payments, your principal balance, which is your insurance, your taxes, and whether it's PMI or MIP or guarantee fee, is going to go into an escrow account, which is going to be held until those amounts become due, right? So every year when your insurance comes due, they're going to pull it out of your escrow account, right? When you're going to make your when they're going to pay your taxes, your property taxes, it's coming out of your escrow account. Again, that's the different types of escrow that you're going to see, right? So you have the escrow company, which plays a big part in the transactional part of the purchase, and then you have your escrow account, which is going to pay you every year, right? So that your insurance is always paid, your taxes are always paid, and then again, if you have mortgage insurance or PMI, that's always paid. So that's where that escrow, again, that word escrow comes around again, right? And it's so some people think, oh my God, my insurance isn't paid, my taxes isn't paid. They're thinking, oh, I got to go back to the escrow company. But no, it's actually with your lender who has that escrow account, right? So that's where you're going to see escrow come up. And a lot of people get confused by it. They say, well, didn't I already pay escrow? Isn't this all the escrow fees, right? But yeah, so you're escrowing twice, right? There's an escrow company which is going to do the escrow for your purchase transaction. Okay. Then we're going to do the escrow for your insurance, taxes, and all of those things that are going to come up for the term of your loan or for the next 30 years in most cases, or till you pay it off, right? So they'll collect your insurance, your taxes, and all of that stuff. So if you have any issues on the escrow side after you close, like your taxes aren't paid, your insurance is not paid, or anything like that, then you go to your lender and say, hey, what's up with my escrow account? And that's where that word will come in on the end, right? So it comes in at the beginning, it comes in the middle, and it comes in the end. You're going to hear it come up all the time. But a lot of people confuse what exactly is escrow, right? Again, just to recap, by definition, it's a financial agreement or legal agreement between a third party that's going to kind of hold all of these things for you. Okay. And that's what happens. So right when your taxes become due, it's a lump sum payment. What we do is we collect it over 12 months and then put it in the escrow account. And then when it's time to pay, then we should have enough in there for 12 months, right? Same thing with your insurance. Okay. Now, the only time your monthly payments should ever go up, if you're on a fixed rate loan, right? The only time it'll ever go up is if your insurance goes up, your property taxes go up. Okay. A lot of that, not a lot of times does your PMI or your MIP go up, because that's pretty much set once you close the loan. Um, nor the guarantee fee on a USDA loan, right? VA, luckily, there's none of that. There's no MIP, there's no PMI. But again, anytime your payment goes up, is usually one of two things. It's insurance went up, property taxes went up. Okay. And then your lender should be able to tell you that. Because here's the thing: if the bill comes, the lender pays it. Okay. They're not going to look at, oh my God, what is it supposed to be? Because we're basically just making sure that we're on top of it. Okay. Then they do an escrow analysis every year to say, okay, did we overpay? Did we underpay? If they overpay, if you overpaid, let's say for some reason taxes go down, right? In some states, if you get some kind of tax exemption and it goes down, or they waive the taxes, right? Then they're gonna say, okay, we over collected, we're gonna reimburse that back to you. Okay. But
Right.
there's also a threshold. So if it's less than, I believe it's less than $50, they're going to reduce your payment for the next 12 months. If it's over $50, then they're going to cut you a check. So
Okay.
something to that effect. I forget the exact numbers, but yeah. So those are basically the two main types of escrow that you're going to see when you're buying a house, right? You're going to see that on the front end. You're going to see it in your settlement statements. You're going to see it in all of that. And you're going to say, why is it? Okay, I'm paying the escrow company all these fees. Then there's another type of escrow. Those are the two different types of escrows. So you're actually entering into two escrows: an escrow again for the purchase, and then an escrow for your taxes, insurance, and whatever other fees, whether it be PMI and all that other stuff, or mortgage insurance. Okay.
I like that. Okay, so we're talking about that. So I want to ask you, so is escrow done the same way in Guam and Nevada? Or is it the same above board, or does each state that it
So
gets?
usually it's going to be, for the most part, it's all the same, right? Because we're all following the same US regulations, right? Um, Still there? Can you hear me?
Yes. When you're talking, I'm trying to put you in the screen. So when I do my thing,
Oh, okay. So when you disappear, you're gone. Okay. Just making sure. I'm not good at this. I'm good at numbers. I'm not good at being in front of the camera and talking. Okay. So yeah, for the most part, right? Some lenders do it a little bit different. There's some lenders that I've seen that don't do escrow for your insurance and taxes, and they'll say, "Hey, listen, make sure you pay your insurance and taxes every year. We're not going to be a part of it," right? And then there's some lenders that do, right? And for me, it's really a matter of preference, as far as, and I know you could also request to say, hey, can I just pay it myself? And it's at the lender's discretion. Usually we like to keep it in there because then we know that you're not, if you don't forget, or you don't forget, and it's not a bill that's going to come up and be like, oh my God, I got to pay $1,500. Or in some states where the taxes could be up to 7-8 grand, it's like, oh my God, I got to pay 8 grand by tomorrow. Otherwise, what happens is, if you don't renew your insurance, or if you don't pay your taxes, the lender will, they'll force place insurance and then charge you a higher premium, right? Because they'll give us a higher premium when we do force place, right? Just so some examples, sometimes even though we escrow the insurance and we send out a payment, sometimes the policy doesn't come back to us, right? And then we go to the borrower and say, hey, we paid, but we haven't gotten your insurance, or vice versa. The insurance says, oh, we haven't paid, we're going to cancel. And it's that in that instance, if that's not resolved, the lender would say, okay, there's no insurance. We need insurance. We're going to force place it. And what could have been $50, $100, $200 a month now goes up to $500, $600 a month, because we're paying a third party that might not even be in your area and might be just upcharging because the bank is forcing it and it has to be done. Right. So it's always good to, make sure that, those things are paid on time. But again, I believe it's on the lender whether or not they're going to escrow insurance and taxes for the most part. Every lender I've worked with, we've always done it. But I know there are some lenders, even in Guam, that don't, right? And again, I don't know that part of it. If it's more of I think it's just more of the lender's preference because it's less work for them. But again, it's really up to the lender. But I want to say a good majority of lenders do escrow the insurance and taxes.
okay, that's really, really good to know. Um, because let's say there's the veteran exemption in certain states like Florida. There,
See, I always
as
feel like I lost you, Miss Ariel. You still there? There you go.
can you? Okay,
But
I'm
yeah,
back.
so again, I
It's
think it's more of a lender preference.
okay. So what I want to ask you is about veterans. Like here in the state of Florida, if you are a
Hmm.
veteran, you get tax
Hmm.
exempt. If you do homesteading, they're giving tax exempt. If you
Hmm.
are first responder, um, police officer, fire, all of those, they're
Hmm.
giving certain amount of credit or whatever for their taxes in the state of Florida. So that's really interesting, but you don't get it at the beginning. You have to put the
Okay.
paperwork in. If it's not done by the date is March 2nd.
Okay.
If it's not done by March
Tax
2nd.
portion of it. Um,
Yeah. Yes.
I
It's
know
uh-oh.
I know for a fact in Guam, I can that get exemption on your property tax in Guam. In the in Nevada, there is a certain amount that it would offset. Okay, so you don't get a full exemption, but there is a certain amount that you can offset. So I forget the actual amounts. Again, I don't really deal with the property taxes, but there is a certain amount you can offset for your vehicles, for your for your vehicle registration, and also your property value, right? So you offset that amount. They'll offset it so that the percentage is on the lower amount, right? So it's not a whole exemption, but you do kind of being a veteran. And
Okay.
I am licensed in California, but I focus more on Nevada and Guam. So, it's kind of hard to jump into a state and say, oh, yeah, I know it all. I'm not going to say I know it all because I really haven't done much, right? I've done a couple of land loans over there and and oddly enough, a lot of the stuff I do in California is from my Vegas and my Guam customers. You know what I mean? So, and it's kind of just like an overflow, which I mean, eventually I'm going to get it to that point where it's like, okay, I got to know because I'm doing so many, right? But,
Right.
and so I just try to speak on what I know, which I know for Guam, absolutely you get you get a VA exemption. For they also offer in Guam for if you're staying in the home, right? If it's your primary residence, they offer a home exemption of I believe $175 off. There's also a senior citizen exemption at 55. You go in there and you say, "Hey, I'm 55. This is my house." I believe they give you 70% off of your tax, whatever your tax is calculated out calculated at. They'll give you a 70% exemption, right? So you only pay actually 30% of that.
No.
As far as first responders and all of that stuff, I don't know. I've never really heard of anything like that for Guam or for Nevada. As far as the exemption on tax, the ones on VA, I do know that it's a certain amount, and
Mhm.
you can offset it. You can use it to offset your property, personal property, like your vehicles, right? So, like one of my VA customers, he was like, "Well, I have two cars, so I'm going to use it towards that, so I don't have to pay for registration on those. And then the difference, I'm going to apply. I applied to my property value, so it brought it down a little bit, right? So again, what happens and he just did that, and it's funny because it was a refinance, and he didn't know about it, right? He was like, "Oh, I could do that," and he went online. And he goes, "Oh, I got X amount left. I'm going to apply this now to my property tax," right? So he was paying full property tax when he could have been paying maybe $50 to $100 less, whichever whatever that could have been as far as the percentages go. And it wasn't
Right.
until I told him, I said, "Hey, you're a veteran. You want to see?" He goes, "I know I have something for my cars, but I don't know if I can." And he goes online. He goes, "Oh yeah, I have this amount of credit that I could apply towards the value of my house to bring down that tax." So he did that. Unfortunately, it's not going to probably take effect until next year because he just did it this year.
Right. Right.
So
Right.
at least, I mean, we're collecting when it comes time to pay, right? Then they do that escrow analysis. They're going to say, "Oh, the taxes went down. We've over collected." They're going to give him a refund, and then his payments will come down a little bit because of that, right? So
Yeah.
yeah. So again, different states. I know a lot of people. I talk to a lot of veterans, and they're like, "Oh, I want to go to Florida and I want to go to Texas." I hear that all the time because they don't tax us on real property. They don't tax us on that. I'm like, "Ooh." I mean, I'm not a veteran, unfortunately, right? So
Right.
it doesn't help me much going to those places. But there are some of those states that, like you said, are very veteran friendly. You know what I mean? And that's a great thing. You know what I mean? Because again, some states, I don't know what the tax percentage is in Florida, but I can imagine it's a big savings for you. I can only imagine it's maybe anywhere between 100 to $300, that you're saving every month without having to pay property tax. right? So
It works well. For right now, I'm still paying to property tax because they said that they didn't
oh, okay,
do.
yeah, because you just bought the house, right?
I
So
bought the house
imagine
in
the veteran
December,
that I
but
helped, he's had that,
I
yeah,
bought it
he
in
had the
December.
house for 5 years.
Oh, whoa,
So
oh,
and he
okay.
didn't know, right? So I said, I was like, you know what? Why is your taxes so high? Don't you get some kind of, And he was like, you know what? I don't know. I never checked. And he goes online and he says, yo, you can apply this much to this. And, so he was like, I was like, well, it's up to you. I mean, if it's an aggregate and you can X amount to this and X amount, he goes, yeah, I'm gonna who you're working with and who's going to kind of say, hey, here's how to save a buck. As a matter of fact, when we refinanced, we also saved him, I think, $200 in insurance.
Wow.
A lot of times when people buy, it's just like whatever's presented to them,
Hmm.
it's like, oh, yes, here, this is, I got your insurance company, I got you this, I got you that, I got all of this ready, just sign, right? And sometimes that accessibility and that, what is it, on the buyer's part, they're just like, okay, cool, I qualify, I like the number, boom, boom, boom. But again, his insurance went from like 250 down to like $80 a month, right? And then again, his property tax is going to go down probably about $100 because of that, right? And he was like, I wish somebody told me these things. I said, well, listen,
Right.
when we escrow your insurance, okay, we're going to pay the insurance company that you selected, okay? If you want to shop around every year and find a better deal, we can absolutely change that. The only thing is, you want to be smart about it and do it for the same time as your renewal so it doesn't mess up the collections, right? You don't want us paying in January when we're used to paying in December and there's a whole 12-month gap, right? Even though the amount goes down, but now the bill's coming at a different time. You know what I mean? So you want to kind of do it, shop around. Like if you close in March and next year you want to shop around for insurance, start looking in January, February. So come February, you can update that and let us know and say, hey, don't pay those guys that $2,000, pay these guys the 1,200. You know what I mean? And that excess is going to come back to you, right? So you don't have to stay with the same insurance company for 30 years. Most people think, oh, I got to stay with them because the bank's paying for it. No, you can still shop around for insurance. You can still, just like we shop around for insurance with our cars every 6 months, right? Which is very shocking to me coming from Guam. I'm used to paying for a year. Okay. Now I got to do it every 6 months. But again, with your home insurance, you could shop around every 6 months, every year and say, okay, who's going to give me a better deal? And if you can get a better deal and the insurance meets the requirements of the lender, you can absolutely change it. And then when they do the escrow analysis, a lot of times, here's what you got to understand. The change is not going to take effect immediately, right? If we're renewing in March and you give us in February, say, okay, we're going to pay these new guys in March, right? Then we're going to see, okay, there was a difference of X amount. And when they do the escrow analysis, we're going to see the overage, and then we're going to reimburse that to you and then make the change to the payment. Okay. So it's not going to be boom, 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 because all of these things are scheduled, right? And we do
Right.
it that way. So it makes it, I mean, if we start changing these things every time the wind blows, it's going to get absolutely confusing. You know what I mean? So
Hmm.
they do it every year. They'll do they'll do an escrow analysis. I mean, and I know some lenders, like even us, we request it sometimes. When things change, we request, updates and say, hey, can we update this because it's, you know, it, it's, it doesn't look right. Or can we see what's going on here? Why are we increasing payments? Why? But we've been collecting since 2023 and making a payment. So we're trying to figure out, did they apply it to the wrong account? And, and now our borrower is delinquent, so, things happen, right?
Yep.
A lot of times, and with all lenders, right? We send one check for everybody. Okay. And that's 99% of the lenders that I've ever dealt with, right? They send one check with a list of property owners, with a list of legal descriptions, and say we're paying for all of this, right? human error occurs. They could apply it to the wrong account, you know. But things happen. It's not all the time, but we see it every once in a while. Which is why, like I said, some lenders prefer not to escrow taxes and insurance and say, "Hey, take care of it yourself, and just show us the bill when you're done."
Right. It makes a big
All
difference, and
right.
I like the fact that you're talking about you don't have to keep the same insurance company year after year, because when I was out there
Yes.
in Nevada, I was looking for my own insurance company to compare prices because they give you a deal. If you do your house and your car, you'll get a deal. Or if you do life insurance
Yes.
and car and the house, you get a
Yeah.
deal. At the time, Progressive was supposed to be the best one. Progressive
Yeah.
sucked big time. And that was the only one because I had a Guam driver's license because I didn't have a resident license. And then living in Nevada trying to get your driver's license, there was a backup for 6 months. By the time it was time for me to, then the computer shut down. And in that
Right.
time, I was like, I
Yeah. I
can't
was
get,
about. You have one.
I couldn't get a break. So I was like, I'm so, oh, whatever,
Yeah.
whatever. So by that time, I totally was
Yeah.
frustrated. But, with that process here, everything was done one on one where the insurance and all this, but then they didn't listen. They said they had to recalculate. Then they said they overpaid. Then they said they underpaid. Then somebody had to send me a check back. Then it's like, okay, then we got to send you another check. Okay, then the guy sent me a check. And because he sent me the check, it was $17 and it looked like Scribble Scrabble. My bank, Navy Federal, said, you know what? Denied. Get another check. It has to have an eligible, legible
Right.
signature. I was like, are you serious? So he keeps sending me these Scribble Scrabble checks and they won't cash it.
Legible,
$17.
right?
I was like, look, dude, this is what's going on. And he's like, oh. I was
Yeah.
like, I gotta send the check back or I gotta come in. And then the company moved. The title company moved. I was like, what is it with everybody
Oh
moving?
wow.
So it's like, oh, I said, I was going to take a ride. Now,
Wow.
mind you, it's a 2 hour ride. I was like, oh, I'll just go down there since I'm going down there. Oh, we're moving. We're packing to move. What? You're packing to move? So
Yeah.
things happen. So I'm glad. And then
Yeah.
what I think, well, people don't tell you is that you get a discount if you have an alarm system. Certain alarm systems in
Well,
there.
a lot of insurance companies they will have different discounts for different things, right? I'm not going to get into that because I really don't know, right?
Right,
Like in Guam, they say, well, if you have shutters, we'll give you a discount. Um, you know, uh,
right.
if you have
Hurricane.
typhoon shutters, right, in Guam, right? Out here, like I said, so understand this. It's been a big culture shock for me, right? Like what we pay for insurance in Guam is way more than we pay for insurance out here for a home, right? I mean, you're
Bingo.
talking like anywhere for four to $500,000 home here in Vegas, you're gonna pay maybe 80 to 120 bucks a month, right?
Mhm.
In Guam, for a $400,000 house, you're paying maybe 150 to 250, right? So it's crazy. I mean, and it's funny because we're going off of the same things, right? We're going off replacement costs, we're going off of all of that stuff. We're insuring for typhoon in Guam, and here we're insuring for hurricane, right?
Right.
It's strange to me, right? And again, it's not my area of expertise, so I couldn't explain it to you as to why. But
Okay.
what I just it caught me off guard. Like, wow, it's so much cheaper for insurance, right? Um, and the fact is Guam has concrete homes, so you would think like it's not going to blow away in a storm. Like, there's a 99% chance that it's not going to fly away in a storm, even at a category 5. It's not supposed to fly away, right? So you would think, you know what? I mean, common sense, right? There's no chance that a concrete home is going to fly away in a storm. Okay. You may get windows broken and all of that stuff. Doors might fly in, but the house itself is not going to fly away. not going to fly away, right?
Okay.
I don't think there's any earthquakes that have completely destroyed houses in Guam. I mean, maybe cracks and all of that stuff. I don't know. They just, as far as the amounts go, it just doesn't make sense to me, right? Why are we paying so much in Guam and out here? I mean, a lot of the homes are wood and concrete board, right? Or what do they call it? Gypsum board, right? But the insurance is
Drywall.
cheaper, right? And I get it, but we're looking or drywall, yeah, gypsum board. Okay, that's what they call them in Guam, gypsum board, right? But it's basically drywall, right?
Right.
And the chances of a house in the States flying away during a hurricane is much more significant. You know what I'm saying? Like
Right.
you got a big chance. I mean, because it's wood with drywall attached to it. I mean, and even as good as they construct it, it could very well fly off, right? But
Right.
the insurance is still so much cheaper. And again, the reason why I'm comparing is because we're looking at replacement costs, right? And a replacement cost is almost the same. And the premiums are just like almost double. It's like, oh my God. You know what I mean? Like it doesn't make sense, right? Like,
Right.
I mean, there's no guarantees, right? But if there's a high chance that the house is not going nowhere, right? I mean, and that's the reason why home insurance is so much cheaper than car insurance, right? Because the car's going around driving in traffic and driving on the freeway. Your house doesn't move, right?
Right.
So that's why it's cheaper than car insurance. But I don't know. Hey, again, those are just some of the things that baffle me, right? And, I can only say, yeah, well, that's what it is. Get quotations and see which one you like best, right? Because I can't explain for the insurance companies.
Right. Okay. Let's see. I'm trying to make sure this is streaming live on what is this thing?
Oh,
Um
okay.
on thing, I guess about live. I don't need to know what it is. I just need to make sure you're going live. Okay. I'm doing all this stuff on Instagram and Thread and Snap. I'm trying to flip from different
Different,
ones.
yeah. You're
So
pro at these things. It takes
I'm
me an hour just to post on Instagram.
don't even get me started with Instagram. I'm like, look, it's like, okay,
You're
viewing, whatever.
lucky if you get 3 posts from you on Instagram.
I tell people it is what it is. That's all I'm gonna say. It is what it is. If it comes, it comes. If it don't, it don't. I'm just gonna say, okay. I'm gonna take your picture and they're
Yeah.
gonna just have to deal with that. And then I'm gonna put it on there. Like, how about this? I'm gonna do that. I've been making sure, like, I'm on so many different thingies, thread, fan base, and
Yeah.
all that. Some of them are good, and then some of them are not so good. Like, but you know what? I guess you live and you learn. So, okay,
Right.
what are the qualities that someone should look for in a lender? Like to pick, because there's so many lenders out there.
Mhm.
What should they look for a lender? Like the qualities. What
Wow.
would be five things that
That's a
you would say?
well, there are so many lenders out there, right?
Right.
And the biggest thing I could say is you got to go with somebody. Um, reputation is one, right? You want to get a lender that has a solid reputation, right? Number two, you want to go with somebody that you're comfortable with, right? Now, and I'm going to say, and I've said this to everybody, I'm not for everybody, right? As a loan officer, okay, I am very informational, very, I'm not all up in your
Education.
face, okay? I'm not going to sell you on anything. I'm going to educate you. You might find somebody out there with a better rate. You absolutely might, okay? I'm not going to deny that. We're competitive, but we're not the best all the time, right? And when you start rate shopping, sometimes you got to see, I equate it to shopping for anything, right? You get what you pay for, right? There are some lenders where they're so quick that, and then at the end of the day, there's so many mistakes that are made, right? And then you get checks going back and forth, and oh, we overpaid, you underpaid, you did this, you did that, right? And half the time the borrower doesn't know what's happening, right? There are some lenders where they sell you on one thing, and then at the end of the day it changes, and they say, oh, because of this and because of that, right? They'll give like a good faith estimate, which, I don't know, I normally don't do. And if I do give a good faith estimate, I will fluff the bunks out of it, because it's not official and I don't know, right? We're just talking hypothetical numbers, right? When we give you a loan estimate, those are numbers that are absolutely solid, but those are high estimate, and 99% of the time they go down, right? So I would rather you be, and this is just me as a loan officer, the way I do VA, and I say, okay, Miss Ariel, we're buying at 300K. We're going to estimate at 5%. Be prepared for 5%. Okay. Because we don't know. You may go with a higher insurance company because they're giving you a great deal on your life insurance. And, you're paying $200 a month, and that's absolutely fine. But that's going to affect the closing costs.
Right.
That's going to be $2,400 a year. Versus if you went with the cheapest one, those are things that I can't control as a loan officer. So I would estimate that, okay, your insurance is going to be 3,000. If you come in below that, absolutely fine. Because if I estimate it at 3,000 and it comes in at 1,500, that other 1,500 just stays in your pocket. Okay. But if you were prepared for 4% of 300 grand at 12K, and you only have to come to the closing table with 7K, we're giving you good news. That's 5K for whatever else you got, right?
Right.
I've lost borrowers because they're like, oh my God, Jose, that looks so high. And I'm like, listen, 100% of the time, I said 99, but now I'm telling you 100% of the time, the closing costs go down, right? When we get all the actual numbers in and we factor in dates for closing and prepaids and all of that wonderful stuff, 100% of the time it goes down. It can go down anywhere from 1,000 to 5,000, right? And that money that's not coming out of your pocket at closing stays with you, right? But again, if you were prepped for 12 and you have to come in with 6, how are you going to feel?
Good.
Versus I say, oh, it's going to be 6 or 7, and then it comes in at 8 or 9. And it's like,
Yeah.
well, you picked the higher insurance company, and then I'm blaming you for it. You know what I
Right.
mean? And there's just so many things that I'm not going to be able to choose for you. Okay. One, I can't choose your property taxes, right? I can't say, hey, well, it'll come in at this. Hopefully the property, well, and the good thing is a lot of the, especially stateside, is we can pull that, right off the bat. But if you're going to ask me an estimate on the spot, I'm going to say, hey, we're going to go at 4 to 5% for closing costs, because I'd rather you have more than enough and be prepped than not enough and be scratching your head like, oh my God, I got to call bank of mom or bank of dad or bank of brother. You know what I mean? Like, hey, I need an extra 2K. You know what I mean? It's so much simpler for me. I rather you have more than enough than not enough, right? I was always taught that at a young age, right? So even when I cook, right, my kids might buy, they might be hungry. What do we say? Man, we had food, but we ate it all. You know what I mean? And there's just so many things that I'm not going to be able to choose for you. Like, especially walk in dinner time. Oh my God, it smells so good. What is that? Man, sorry, I cooked, but there's no more. You know what I mean?
Right. It's cleaning. It's cleaning.
I warned everyone.
I like that. That was like, dude.
Sorry about that. I did give everybody advance notice. Like, hey,
It's okay. That's cute. I
yeah,
wanted to ask you, okay, you get, okay, give an example. You get a VA loan and then you move in the house
okay,
and you know that
okay,
you have some renovations you need to do. So you want to do these
okay,
renovations. So you're at like, I
Hmm.
think the market rate right now is like 5.5 for VA.
Hmm.
So will the
Yeah.
renovation be 5.5? Say you get it today. The
So
renovation loan, if you want to do it
okay.
the market rate. How does that work?
So I'm going to be absolutely honest with you. Usually, when we do a renovation loan, the rates are slightly higher, right? Because
Oh, wow.
there's a lot more that goes into it. Not and we're not talking 5.5 versus 7%, right? It might be 5.5 to 5.75 or 5.875, right? Like I can't tell you exact numbers because I would
Right,
have
right,
to
right.
actually, we do everything based on the whole, yeah. So it's going to be slightly higher, right? Like I'm
Okay.
going to give you an example. Right now, I'm doing an FHA renovation on Guam, right? So the rate we're giving him right now is at 6.75. If he did a
Woo!
regular FHA, I could have given him 6.25, I believe, or something like that, right? I'm just throwing out numbers, right?
Right.
Hypothetically. And the reason why is because it's a different product, right? So when you're doing different products, you got to deal with different, different what do you call it? There's different aspects on the back end, right? Like we're gonna have to hold the file a lot longer, okay? Because we can't turn around and sell it to the secondary market till it's fully closed and all the money's gone, right? So it's gonna sit with us. We have, there's more people involved in it, right? We're going to have people that are reviewing your bids. They're going to have to go out and do inspections. They're going to have to review appraisals after the fact, right? So it's going to be a lot longer process than your regular 30-day or 15, 20-day close. You know what I mean? Because even if we close it in 15, 20 days, your renovations could take anywhere from 30 days to 120 days, maybe even 6 months, depending on the scopes of your renovation, right? So at that point, we got to factor in the cost of having all those things, right? And managing all those things. So is it the same interest rate? 9 times out of 10, it's not. But it's not like I said, you're looking at 5.5 versus maybe at most 6%, which is half a percent, not 5.5 and 8%, right? Like, oh, you want to do a reno? Now we're going to kill you. No. But then if you think about it, you step back and you look at it, right? You get let's just throw out a number here. You buy a house at 300K and then you go get a personal loan, okay, for 5 years for 50K at $1,000 a month. Now you're paying your mortgage at what's 300K. That's going to be, man, I used to be so much better at this. Let's just say $2,000 and then $1,000 for that personal loan, right?
Right.
I used to be able to calculate
Spew
it
it
in my
out.
head. As I get older, I can't anymore, right? So 300K, 2,000 a month, and then you're paying $1,000 for that personal, right? Now you're paying $3,000 a month for your house, okay? And these are true stories, right? Now, I was just talking to a lady today, and I said, listen, if you buy it with a USDA loan, 50K, right? Now, if we did a reno loan at 285, which is going to be about 25,000 in renovations, okay,
Mhm.
you're going to pay 1,800 a month. So you're going to pay about $100 more and renovate the house, okay, at a slightly higher interest rate, and you're borrowing more money, but you're fixing your house to where you don't have to fix it with a personal loan or a home equity loan or anything
Okay.
like that, right?
Right.
Because then you think that like a home equity loan at 10 years is going to cost you about $500 at 9-10%. You know what I mean? But if you
Right.
factor it all into that one loan, it's going to be so much cheaper over time. You
Makes
know what
sense.
I mean? And then, of course, if you pay extra to that, right? So it's easier to pay extra to that $1,900 than it is to pay to that $3,000.
Right. That makes sense. Okay.
You get
So
what I'm saying?
I get it. I
So
totally
you
get it.
can pay, let's just say, yeah, yeah.
I wanted to ask you, so what is
I
the
mean, it scares people away sometimes when you say,
go ahead.
go ahead.
I said you said it scares people
No,
away.
I was done.
Okay. Oh, well.
That part, yeah. So it scares people away when I say the rate's going to be slightly higher, right? But then if you step back, right, and you
Mhm.
look at it, if you're going to take that 50K and put it, if you have it in your pocket, then you wouldn't be financing, so much, right? You would probably put that towards your down payment. Now, if you, and you always want to keep money in the bank as much as possible, right? We always want to have a little bit of liquidity in case something happens, right? So, you kind of have to look at the big picture. Is that fraction of a percent worth running away and saying, okay, let me go get a personal loan and pay an extra five, or like I said, 50K, you're looking at 900 to 1200 bucks, right? Yeah,
Right.
it's only for 5 years, but again, it's easier to pay. If you could afford to pay that $3,000, you could pay that to your mortgage and cut down that 30 years
Right.
versus paying 2,000 here and 1,000 there and being like, oh god,
Right. It makes sense.
you
So
know what I
the
mean?
thing is, what is the cap
Now
of for refinancing?
you got to pay 3,500 to 4,000 to try to pay them off quicker. You know what I mean?
Wow. Gotcha. I like
Refinance.
that.
So usually when you're refinancing, huh?
I said I didn't like that
Okay, so
number. That
which one?
huge
Oh,
number.
okay. Okay, so refinancing, it's all going to be, and you know what? It's funny. It's like when you sign a loan estimate, right? A lot of people don't realize on that third page, it says refinancing is going to be based on your future situation, right? So it's going to be based on future rates. It's going to be based on financial condition, value of the property, right? So depending on what type of loan we're looking at, and I know with you, you're a VA, you're a veteran, right? So you qualify for the
Uh-huh.
VA loan. So you could get up to 100% of your value, right? And again, depending on your lender, right? We could go 90% or 100%. Of course, if we go 90%, because we still have that 10% kind of cushion, it'll give you a better rate than if you went 100%. Okay. But it's all going to, so if your value has gone up, the max would be 90% or 100% of that value, or on top of what you qualify for, debt to income ratio wise, right? So let's say for example, your, what did you buy your house at?
375.
What did you close on?
No.
375. Okay.
No.
Now,
When it all came through, I looked at the paper, was $398.
oh wow,
Yeah.
398,000. Okay, but your purchase price was 375. Your
Hmm.
loan amount was 398. Wow.
When
Okay.
yeah,
So
like
when
when
you
they did
refi,
all
if you
the
if you try to refi, here's the problem, right? Is if it appraises for 400K, the max they'll give you is 400K, and you might not have any room to get any money out. You get what I'm saying?
yeah.
So that's another thing, is when you're buying at a low to no down payment, usually, I mean, sometimes you get lucky and it'll praise for a lot more, right? But if it doesn't and you don't have that equity, and it's not going to, and usually you'll see that when the market's going up, right? So from 2020, 2021, 2022, the prices just kept skyrocketing because the demand was so high. So the prices kept going up. Now we're in a little bit of a slower market where houses aren't moving as fast as they can, right? Or as fast as they used to, right? Now,
Correct.
and you look at Vegas where there's so many new builds that they're trying to get rid of. And when they start
Mhm.
dropping the prices on these new builds, okay, all the houses that are in resale is like, okay, how do you compete when they drop the price and we're asking this much? You know what
Right.
I mean? So those are starting to come down. So if you're trying to refinance in an environment where people are dropping prices around you, your value is coming down, right? And that's where how the market dictates the value, right? So when they brought up interest rates, they said, okay, we're going to bring up interest rates because the inflation of the housing prices, are, I mean, everything, inflation in general was going through the roof, right? So
Right.
now you're starting to see those effects. Now, when you go on Zillow or when you go on realtor.com and you start looking at all these houses, right? How many times, and this was what, a year ago when you started, how many times did you see price drop, price drop, price drop, price drop,
A lot.
right? And you're like, There was one house that you looked at that was on there for a year,
Mm-hmm.
right? And so that's what the interest rates increasing did, is it made it so that people aren't now going out and bidding like it's Black Friday on houses, grabbing everything off the shelf. Right now the shelf is full. I mean, and for lack of a better word, that's what happens. The shelf is full. Now buyers have a little bit more time to say, well, no, I don't want that. It's been on there for a year. It's been on there for a year and a half. It's been there 6 months. You think they'll take a lower price? And when they do, that affects the market value around it, right? So when you're buying it, and this is why I preach those renovation loans, right? Is like, if you do that and you factor it all into one payment and you can afford it and you're comfortable with that payment, now you're paying for a house that you absolutely love, not just a house that you like, right? A house that you absolutely love, right? Now, if you put 30K, 40K into that house that you bought and paid $200 more a month, how would you feel about that?
Feel good. For the house that I love, that I built, yeah, I
You would
feel
feel
good
good, right?
because I love
So,
it. Because it's
so the
something
house
I
that you're in, no, the house that you, so if you put 40K into the house that you're in right now, the one that you bought, and said, okay, I'm going to do this, and that, and you did it your way and you financed it and your payment was only 100 to 200 bucks more, it would be absolutely great, right?
right. I
So
agree.
that's why I preach those rental loans, because it's like, especially like I have a customer that's in California and she's like, okay, I've been living in this house. I like it, but I don't love it. There's some things that need to be done. I said, well, what if you took that house and made it to what you absolutely loved? You know what I mean? Pull out the carpets, change the windows, and if you can do that in an amount that's feasible and we could tack that on and it's only going to be 100 to $200 more a month for that extra 30-40K, why not? Right? I equate it to a car. When you go buying a car, you test drive it, you do all of these things, and those are brand new, right? You ain't gonna buy an ugly car. You're not gonna buy a car. For me, right? I'm not gonna go buy something and I'm gonna pay every month for and be like, I hate this damn car or I hate this damn house. You know what I mean?
Bingo. I
So
got
that's one of the benefits of those renovation loans is like, okay, it's not the house that I wanted, but I'm gonna make it that way, right? And,
you. Right.
and a lot of times, it's all cosmetic stuff. Okay, we don't like the kitchen. We want to change the cabinets. We want to change the appliances. We got to change this, or it's the bathroom. I don't like the tiles. I don't like the shower head. I don't. I went to an open house the other day, right? And the realtor was like, you know what? This would be perfect for one of those renovation loans, right? So I go use the restroom, right? And I'm like, yeah, we need to get rid of that toilet seat because it was like a wooden toilet seat that matched the cabinets. So I was like, man, that's so like 20 years ago, right? Like I had, you get what I'm saying, right? It was like a wood grain, like a wooden toilet seat
Get it.
that matched
I
the
know
color of the
exactly what
cabinet.
they
And
look
I'm like,
like.
okay, um, yeah, yeah, you know what I mean? And for me, those things don't really bother me. But I can imagine if a family walked in, the wife walked into that bathroom and said, "Oh my God, this is the bathroom that everybody's gonna see." You know what I mean? Like,
Right.
you got to do something about that, right? Or like, I don't know if you've ever gone into a house with an old, like a black toilet, right? Because black toilets used to be cool at one point, like all black toilets. You
Oh
walk
boy.
in there and you see a black toilet and you're gonna use the bathroom, it's kind of scary.
It would be. I think that would
But
freak.
again, there's
It's a delay, right?
sorry, say that again. I it cut off.
I said, "Oh,
Yeah.
it's a delay." I noticed it's a delay today. Delay in the recording from when we're
Oh,
saying
okay.
this. It's okay, but still good show. Uh, Giving out good information. So, what happens if you
All
have
right.
a FHA? Does FHA do refinancing, rehabilitation, or whatever
So
to rehab the house?
well, again, The rehabilitation part is more so on the purchase side, right? And we add that to the acquisition, right? And the good thing about doing it in the purchase side is we do what's called a subject to appraisal, right? So even if the house is again 300, like say 300 grand, right? And you're going to do 50, 60, 100, 200K in upgrades, we can send the list of those repairs to the appraiser and say, hey, you're going to appraise it as if all of this was done and see if it's worth the money. You understand what I'm saying? It's a little bit, we don't really do it on refinances because it's a little bit more difficult, right? And I would have to defer to our rental people on why and why not. As a matter of fact, I was just asking that question the other day, like, hey, can we do this on refinances? And I think we can, and we're trying to work that out because the beauty of that renovation portion is the subject to portion. Okay. When you're doing a refinance, it's based on the condition now.
Makes sense.
Okay.
Makes sense.
When you're doing the purchase with the renovation attached, we're doing a category, right? So if you're in a 1950s house and you put 50K in modern renovations to where now we can they're going to compare it to one of the newer homes, maybe not the newest homes, but some of the newer homes or some of the ones that are renovated versus the ones that aren't, that are selling for 300, you might actually increase your property value, right? And in some cases, you might increase it more than what your actual acquisition costs. And when I say acquisition, is your purchase price plus your reno, right? Let's say you go 300 for your purchase and 50 for your reno, and then that just puts your value at 400K now because of the types of renovations you did, right? Because there's certain types of renovations that could kick up the value, right? Let's say you put in a solar system that wasn't there, or you redid the whole kitchen, right? Or a lot of times those are, or upgraded all the appliances, right? Those things will add value, right? If you're putting a stainless steel fridge, a bigger stainless steel fridge where it used to be one of those 1950s ice boxes, right? It's going to increase the value in some way, right? So those are some of the things to consider, right? Like I said, I've heard from a lot of customers that come to me after the fact, right, and say, hey, I bought this house, when can I refinance and get equity? Now the market's going to dictate that, right? Like, so in 2020, 2021, 2022, parts of 22, early 2022, those guys got lucky because the values were coming up, right? So I saw a house, Miss Ariel, that went, I did a house 4 times, okay? 2 purchases and 2 refinances on this same house from 2019 to 2024, okay? From 2019, when they bought it at 270 to when they sold it in 2024, the value went from 275 to 495 in that whole crazy time, right? So refinancing for them was easy. Refinancing twice was easy, and then selling at a higher price was easy. And they did no upgrades. Like, the house was fully renovated when they bought it at 275. And all they did was let the market dictate that, right? Now we're in a different market where, again, it's not moving as fast. It's not moving fast at all in some places, right? Now, when you have that and you buy at 400K, there's a chance that it might not go up next year. You know what I mean? Or it might stay the same. Or if there's a bunch of new builds that are dropping their prices to get rid of it around your area, it could bring your value down. You get what I'm saying? So those are, there's a lot of things that dictate the pricing in the market. And so buying and then trying to get a home equity to renovate is more difficult, especially if you bought at 95%. And most times home equities are only going to give you 80% of the value. So if you're already at 95%, you're not going to have anything for them to loan against. You know what I mean? Or you're not going to have any equity for them to, so those renovation loans help get it all done up front. You get one payment, and then in the next 5 to 10 years, or whenever those rates drop, that's when you look to refinance. You know what I
Right.
mean? Because now it makes sense because you're trying to bring down that payment overall. Um, like I said, one thing good about the VA is they have that interest rate reduction loan, right? Where they don't need to do an appraisal. Okay. But again, that's a no cash out. So if you wanted to get cash out with no appraisal, it's not happening. Right. But if you were to try to do a refinance right now and they did an appraisal, we don't know how much it's going to actually come up or if it's only going to go down. Right. And then you're out $800 for the appraisal.
Mm-hmm. That makes sense.
Right. Makes sense. So, and like I said, that's why I push the renovation loans because for me, I always, like I said, I think about myself and what I would do, right? If there's things I don't like, we could always say that we're going to do it later, right? But then where's that money coming from? Are we going to tap into our savings? Are we going to get a personal loan? Are we going to get this? Are we going to get that? And then now that becomes, even though it's not part of our home payment, it becomes part of our housing payment because we're paying $500 for that $30,000 personal loan or $1,000 for that $50,000 personal loan, right?
Right.
And so we use it for the house and it's not technically our mortgage payment. We used it for the house, so it's our mortgage payment. That extra 1,000, that extra 500,
Right.
even 10 grand at 200 or maybe 250 with today's rates, right? It's 250 more that you can get a lot when you're spreading it out over 30 years. You can get a lot more at a lesser amount. Yes, everybody's going to say this, and they're going to say, "Well, what about the interest you're paying?" Yes, you're going to pay interest. You're going to pay interest on that personal loan. You're going to pay interest on on that HELOC or whatever type of loan. You're going to pay interest anyway, right? Now,
Right.
again, back to what I said earlier, it's easier to pay extra when you're paying $2,000 a month with the renovations,
Right.
and pay 2,500 or 3,000 and say, okay, I'm going to try to pay this down quicker, combat that interest, versus saying, okay, I paid 2,000 a month for this 300. Now I'm paying 1,000 a month for this personal loan at 50K. And then now I got to pay 35 to 4,000 to pay that off, right? And to try to pay, so it's kind of all perspective and how you look at it, right? Some people may not agree with the way I look at it. Some people will say, well, yeah, but it's just you're paying interest for 30 years. Yes, but you don't have to, most loans that are like FHA, VA, USDA, and the conventional stuff through, your regular lenders, there's no prepayment penalty. So whatever you put into the principal, you're just combating that interest. I mean, even just an extra $100 a month could go from from 30 years down to 29, 28 years if you're doing that consistently at $100, right?
Mm-hmm. See,
It's
and
going to
I was
lessen that less overall interest.
right now. I was
Right.
talking
I had
to.
a customer.
Go ahead. I can't hear you. You had a customer. Hello. Did you freeze on me?
Go ahead.
I said you said you had a customer. Go ahead.
Oh, yeah. So I had a customer just the other day, right? We sent a loan estimate and then he sees all these things on. Hello?
I'm here.
Hello, hello?
I'm here.
Okay. Did I freeze? Can you see me?
You freeze for a little bit, but I got you.
Me?
Yes.
Am I still here?
Yes.
Okay. All right. So I had a customer the other day. And he said, Jose, why is it so much? And I said, what do you mean? I saw the paper, it said like $900K or $1,000 mortgage, right? And he goes, why am I paying interest? And why am I going to, pay almost $900K for this house? And, and trust me, it's scary if you don't know. But then if you you got to kind of go back to what people are familiar with, right? So I sent him an amortization for a $40,000 loan, right? Because that's the average amount for a car these days, right? Everybody's had a car loan, okay?
Right.
$40,000 at 5 years you're going to pay about 7 grand at 7%, right? And I'm just using, basic numbers, right? 7%, 40,000, 5 years, you're going to pay about 7,000 in interest. Okay. Now you take that 40,000 and you do it for 30 years at 7%. You're going to pay 55,000 in interest. So you would have paid 90,000 for that car, which is almost double. Okay.
Right.
And he was like, okay, but why? I said, and that's exactly why. Okay. We have to spread it out over 30 years so it's affordable. Okay.
Right.
And if we don't do that, if we did a 5-year loan for 400K, you're going to be paying what, 10 grand a month.
Right.
Who can afford that?
Right. Makes sense.
You know what I mean? Like, there's people who can't afford it, but it's not a good majority, right? So, and when I explained it, that get it. Now I kind of understand, right? Because of course, when you're looking at you're going to compare it to what you know. Okay, I bought my car for 40 grand. I only paid 7,000 in interest. Yeah, so I said 40 grand times 10, and then 5 years to pay down quicker is to pay more to the principal. Okay, and again, there's no prepayment penalties on these things. So when you're paying extra and you have the ability to pay extra, that's where you're going to combat that total interest. Right? So, like, I mean, it's all about perspective and how you look. Some people shop based on rates. Some people, and I think we're way off the question of top 5 qualities of a lender, but we kind of strayed away from that. But I'm going to give you it straight. This is what it is. This is what it looks like. I urge you to shop around, right? Because honestly, 9 times out of 10, they come back because they're not getting the answers that they're looking for. Okay? They let the rates do the talking for them, right? Which is, hey, that's cool. I could be, you can go into a place where they're giving 4% interest, right? And have so many upset customers because they don't really know what happened. You know what I mean? So it's really, you want to go with somebody that's trustworthy, somebody that's honest, somebody that has integrity, because there's a lot of people without it. Okay. I'm not saying I'm the best thing since sliced bread, but that's the way I go. I'm more about education. If you decide to go somewhere else, then hey, great. You know what I mean?
All right. Well, we did an hour in no time at all. So, do you think you want to do this again? Do you trust me?
I mean, I'm willing, I mean, you ask you ask questions that people want to know, and I'm willing to answer it as best as I could.
Okay. How about if we talk about HELOCs? Because there's different kinds of HELOCs that are coming out now today, especially since it's so popular on TikTok. We gotta do that.
Okay, we can talk about it. Okay, you know what? I mean, yeah, there are a lot of things. I may not be able to explain everything because, like I mentioned before, right? Every lender is different, right? Just like rates are different, programs are, when you're talking like basic stuff, right? Like VA, USDA, conventional, FHA, those are kind of standard, right? Everybody's following the same rules, right? Some banks have overlays, some don't. Some mortgage companies, some mortgage brokers have overlays, and some don't, right? But for the most part, the programs are the same. Now, when you go into HELOCs and home equities and all of that, that's a completely different animal because it's not the same, right? And we could kind of touch base on that. I mean, because a lot of times those are what they call portfolio loans, right? Or in-house loans, right? So the lender kind of dictates the process and the programs and the rates and the fees and what they do and what they don't and LTVs and all of that. So we can have probably a general conversation on it because again, and I'm going to say this, when it comes to HELOC, you got to talk to the actual, so many things that change and, some does this, some do this, some do that. Right. So we could probably have a very broad conversation on it. But I won't be able to answer all the questions because again, every lender is different, right? There's no VA and FHA guide on HELOCs. You know what I mean? Like, or
Oh,
conventional guide on HELOCs, right? Those are more for the big stuff, right? Those HELOC things, it's kind of, I want to say it's equivalent to the Wild Wild West, right? So
I like that. Okay.
see,
So we'll schedule another time, but HELOCs won't be the other thing because we want to get people proficient in lender language, how they can go and be able to speak
gotcha.
fluent lender language because that
You
is
know
the
what would
goal.
be good, right?
Mhm.
Is if you want, right? We can maybe look up some HELOC terms,
Okay.
right? And just because you're going to see different home equity versus home equity line of credit, right? Or
Right.
fixed, adjustable, stuff like that, right? Open-ended, close-ended, stuff like that. Those we can kind of, pinpoint on, because those will kind of help you identify what you're looking for, right? Because there's some home equity loans where it's one shot. It's kind of like a personal loan. You open it, they disperse the full amount, and then you're done. You just start paying. And then there's the
Right.
HELOC, right? So the difference between a home equity loan and a home equity line of credit is that line of credit is open-ended, like your credit cards, right? You use it, you pay it back. You use it, you pay it back. You can still use it. Sometimes they'll give it to you for a year, 5 years, 10 years, and then they say, okay, boom, whatever your balance is on that when we close, that's where you're stuck at. Like, that's what you got to pay, right? So different ways, different terms on that. I think that'll probably be our best bet. To
Okay.
kind of, maybe if you want to look up some terms, and I can look up some terms that you might see in that HELOC or home equity space that can help you identify what's what. I think that would be a better way versus trying to
Okay.
explain everything about
I get
HELOCs
that.
and
No,
home
I get it.
equities, right?
I,
But yeah,
yeah.
let's do that. You let me
Okay.
know. I can put some stuff together. You can put some stuff together, and then we'll go over it and see what we want to put out there, or what we can put out
Or
there that's
even the first
not going to
time, like,
spin people's heads, so to speak.
right. Well, the thing is also first time home
All
buyer.
right,
Okay. That sounds good. So did you hear me? But I'm
we can do that. All right,
yeah.
you
So
let me know. Okay,
okay. Thank you.
what's that?
I said thank you. It's a delay. I was saying thank
I
you.
was like, huh? Okay. Oh, okay. You're welcome. Thank you for having me again. And like I said, I enjoy answering the questions. You know what I mean? Like I said, you know me. I'm all about knowledge. I think every time we got to double back and say we did 3 transactions together, right? None of them
Yes.
closed because of the properties, but every time, and the reason why I bring it up, right, is not to put air out dirty laundry, but the reason why I bring it up is because every time that loan estimate came out for the new property, there was a different question, right? Even though all 3 loan estimates were exactly the same. I mean, numbers, of course, were different because there were different price points, but every
Right.
loan estimate was exactly the same based on the purchase price. But every time that loan estimate came out with you as a first time home buyer, there was another question that would come up, right? So,
Right.
I mean, again, I absolutely think that we could focus on first time home buyers, and like I said, you saw it 3 times, maybe 4 or 5 times in the last year, and I know for a fact, I think was it 3 or 4 that we went through, and every time there was a different question, and not to
Yep.
say that's a bad thing, but it's just some certain things catch your eye at different times,
Yeah.
right, and in different scenarios,
Right. And you
right?
just get
So
better
again,
because you know what
that's
questions
something
to
we
ask.
could touch base on.
Okay. Sounds
Yeah,
good. I'm gonna close out the
correct.
show.
Correct. All
Because
right.
people are gonna be like,
Okay. Thanks
what?
for having me again.
All right. Good night, people. If you have any questions, let me know.
No matter what obstacle seems to get in my way, planet above it. Because I travel to the south, to the north, to the east, to the west, through many portals and dimensions to reach the height in the universe.